Good evening, my dears. அனைவருக்கும் என் அன்பான வணக்கங்கள். Am I audible?
Good afternoon.
Yeah, good afternoon. எல்லாரும் கேக்குதா? Am I audible? Good. எல்லாம் சாப்பிட்டாச்சா? ஆரம்பிக்கலாமா? ரெடியா இருக்கீங்களா? We are in capital budgeting, also called investment decision. Am I right? This is a investment decision with respect to decision making with respect to long term. If I am going to do the decision with respect to short term, that short term decision making process are known as working capital management. Short term decision making process are called what? Working capital management. Whereas decision making with respect to long term are known as capital budgeting. So we are in capital budgeting. Yeah. With respect to evaluation of capital budgeting, project evaluation tools or decision making indicators. What are all the decision making indicators are there with respect to capital budgeting? Simple payback, payback reciprocal, simple payback, payback reciprocal, then ARR, accounting rate of return or average rate of return or annual rate of return. Next, net present value, profitability index, also called desirability factor. Then IRR, internal rate of return. And last one is modified internal rate of return, MIRR. So 8 project evaluation techniques are there. So first one, simple payback. Simple payback represent time duration required to get back the amount invested. Time duration required to get back the amount invested is called simple payback. Clear? I have invested the fund. When I am going to get back, that time duration is called simple payback. If I am investing fund to the extent of 25 lakhs and getting back the return out of the business every year, each year 5 lakhs, 5 lakhs, 5 lakhs. When I can be in the position to get back the entire amount I have invested, you can also participate. I have invested 25 lakhs. Every year I am getting back 5 lakhs, 5 lakhs, 5 lakhs. How long I need to get back the amount I have invested? Either you can text me or you can
5 years.
5 years. How come 5 years? Investment 25 lakhs, 5 years return. Therefore, 25 lakh divided by 5 lakh is equal to 5 years is a return. We have to wait for 5 years. That is called what? Payback period. எவ்வளோ காலம் நான் வெயிட் பண்ணணும், இன்வெஸ்ட் பண்ண அமௌண்ட் எடுக்க எவ்வளோ, how long I have to wait is called payback period. That calculation is called simple payback. Formula for the simple payback is initial investment divided by CFAT per annum. How much I have invested, how much I am getting back. So initial investment divided by CFAT per annum. Okay, good. Harish, புரியுதா உங்களுக்கு? Next one is called payback reciprocal. Payback reciprocal means what? Reciprocal of simple payback. What is reciprocal? Inverse is called reciprocal. So the payback reciprocal we have to express in terms of percentage. We have to express in percentage. Clear? Therefore, what would the formula for payback reciprocal? CFAT per annum divided by initial investment into 100. CFAT divided by initial investment into 100. The same question, initial investment 25 lakhs, CFAT per annum 5 lakhs. What could the payback reciprocal? 5 lakhs divided by 25 lakhs into 100 is equal to how much percentage? What is the return on investment transaction?
20%.
So 20%. So payback reciprocal is equal to 20%. So simple payback we are going to express in terms of years, how long you have to wait. Whereas payback reciprocal by way of percentage. Now got the difference between simple and payback reciprocal? Purida Kana? The next one is called ARR. Yes, Harish, 20%. ARR. ARR represent accounting rate of return or average rate of return or annual rate of return. I have told 7 different formulas are that to solve ARR. Any one of the formula you can apply. Although for each formula going to give different answer only. So which one is substantially we are applying based on the past examination questions? ARR is equal to average profit after tax per annum divided by net initial investment into 100. ARR also we have to express in terms of percentage. Formula for ARR is average profit after tax divided by net initial investment into 100. Clear? So if you see the entire project evaluation technique, entire capital budgeting, only for the purpose of computation of ARR, accounting rate of return or average rate of return, only for ARR, we are using the tool called profit after tax. All other tools, we are using only CFAT alone. Understand logic or not? எல்லாத்துலயும் CFAT தான் யூஸ் பண்றோம். Whereas only for ARR computation, we are using PAT. The difference between PAT and the CFAT is depreciation. Profit after tax plus depreciation is equal to CFAT. Profit after tax plus depreciation is equal to CFAT. All the concept we are using CFAT only, but only for computation of ARR we are using profit after tax. Understand logic or not? All of you. Purida.
Yes,
Next.
sir.
Next. So the simple payback reciprocal ARR. The 3 techniques are without considering time value of money. Okay. So without considering time value of money, what is called the time value of money? Whatever the money, purchasing power out of money, today's money may not equal to tomorrow. Purchasing power out of money today is not equal to what? Tomorrow. That is called what? Time value of money. Worth of your rupee received today is not equal to worth of your rupee to be received in future. Worth of your rupee received today is not equal to worth of your rupee to be received in future is called time value of money, also called time preference of money. It's a very frequently asked question. So explain time value of money or time preference of money. Note paniko. Worth of your rupee received today. Worth of your rupee received today is not equal to worth of your rupee to be received in future. Worth of your rupee to be received in future, known as time value of money or time preference of money. Okay. Reason for time preference of money. Reason for time preference of money. That is also very frequently asked question. Suppose I am ready to give 1 lakh rupee. Option A, today you can get 1 lakh rupee from me. Or after your completion of intermediate, you can get the 1 lakh rupee from me. Which offer you will prefer? Which option you will prefer?
1 lakh today.
1 lakh today. What about others?
1 lakh today, sir.
Today only. Any other option? Others? Manigandan, Harish, Guru, Ema Bindu, Jyotika, today சொல்லிட்டீங்க. Okay. So the options are there. Today only. Am I right or not? Clear? Everybody wants today. Why today itself? Why not after you cleared the examination? Why not after you cleared the
In that main
examination?
gap, I can invest anywhere else and get some return out of it.
Yes. Today, if I got the money, I can invest somewhere. Okay. So because of investment opportunity. Till the time, at the time of you clearing the CA examination, intermediate examination, you will get 1 lakh plus extra interest. Am I right? Very good, Kannan. Or today I'm ready to give the money. Tomorrow I may not be able to give. Am I right or not? Therefore, risk factor is involved. Therefore, due to risk factor, the options are there means everybody want to get the money today itself. Understand? Due to risk factor involved. It may be because of what? Urgency. I need money urgently. Somebody is there in hospital. I need the money. Then today money is only I need. Am I right or not? Because of urgency. Because of purchasing power. Okay, inflation will happen. So these are all the reason in which one we want the money today itself. We prefer the money today itself. It's also very frequently asked 3 more question. Reason for time preference of money. Can you note it down? Reason for time preference of money. Reason for time preference of money. A reason for the time preference. What all the reason? First one, due to urgency. Investment opportunity. One is urgency. Second one, investment opportunity. Then third one, risk. Risk of bad debts. Risk. Inflation. Fourth one, inflation. Risk. Thereafter, inflation. And last one is due to capital budgeting technique. Due to capital budgeting decisions. Due to capital budgeting decision. These are all the reason for time preference of money. Next, methods of computation of time value of money. 3 mark question. Methods of computation of time value of money. Segregate into 2 parts. One is present value of future money. Another one is future value of present money. Shashank, note panikriya. Present value of future money. Another one is future value of present money. Ritika, welcome.
Yes, sir.
What happened yesterday?
What, sir?
Ritika, not Jyotika, Ritika. Yesterday absent? What happened?
No, sir, I'm having college, so I'm seeing recording classes.
Okay. You are from which place?
Chennai only, sir.
So first one is what? Present value of future money. Another one is future value of present money. Under present value of future money, use discounting technique. And future value of present money, use compounding technique. First one discounting technique. Second one is compounding technique. Understood? So whenever they ask explain time value of money, you have to write all the 3. How to draft? Worth of your rupee. First you have to write the definition. Am I right? What called definition? Time value of money. Worth of your rupee received today is not equal to worth of your rupee to be received in future is called time value of money. Worth of your rupee received today is not equal to worth of your rupee to be received in future is called time value of money. Then reason for time preference of money, 5 reason. Investment opportunity. Then risk involved, risk factor. then due to urgency, inflation, capital budgeting decision. These are all the reason for time preference of money. Thereafter, you have to write methods of computation of time value of money. What are all the methods? Present value of future money, future value of present money. In case of present value of future money, you have to use discounting technique. Future value of present money, you have to use compounding technique. Understood, Kanna? Okay, these are all the things
Yes,
you have
sir.
to maintain. Okay. Next, discounted payback. Now we are going to discuss about discounted payback. Discounted payback. Discounted payback. It represents time duration required to get back the amount invested. Time duration required to get back the amount invested. Okay. It's similar to the computation of simple payback. It's similar to the computation of simple payback, but after considering but after considering time value of money. But after considering time value of money. So with the considering time value of money, that is called discounted payback. Without considering time value of money, that is called simple payback. Understood, Kanna?
Yes, sir.
Good. Reddy garu అర్థమైందా?
Yes, sir.
Now, we'll do one problem based on discount payback. Kindly read the question.
Yes, sir.
Initial investment is equal to 2.10 lakhs. Project life is 6 years. Cash flow after tax per annum: year 1 18,000, year 2 27,000, year 3 86,000, year 4 98,000, year 5 78,000. Discount factor at 10%. Compute discounted payback period.
Go through the question quickly. Question is there in the chat box itself. Initial investment 2,10,000. Year 1 to year 5 CFAT is given. Discount percentage 10. Right? We have to compute discounted payback. So, statement of computation of discounted payback. Statement of computation of discounted payback. First column year, under the year 1, 2, 3, 4, that note down. Up to 5 years you can note it down. Next column CFAT. CFAT per annum given in this question. What about the CFAT per annum? 18,000, 27,000, 86,000, 98,000 and 78,000. Next, PV factor at the rate of 10%. Third column, PV factor at the rate of 10%. 0.9091, 0.8264, 0.7513, 0.68, 30 and 0.6209. Am I right? You know the PV factor table, am I right? The table will be there in the question paper itself. They will give in the examination list. Same table will. I'll repeat: 0.9091, 0.8264, 0.7513, 0.6830, and 0.6209. CFAT into discounted CFAT. So, what about discounted CFAT? 18,000 into 0.9091. Similarly, 27,000 into 8264. Multiplication. So multiplication and answer 16,364 agana. Second one, second year 22,312. Third year 86,000 into 7513 comes to 64,612. 98,000 into 6830, 0.6830, 66,934. And the fifth year 68,000 into 0.6209, 42,221. So here CFAT, PV factor, discounted CFAT. Next, cumulative discounted CFAT. Then like compute cumulative discounted CFAT. Add பண்ணி சொல்லுங்க. Year 1 எவ்வளோடா 16,364. Year 2 38,677. Third year 1,03,288. செக் பண்ணிக்கோ ரைட்டா இருக்குன்னு ஜோதிகா. Year 4 1,70,222. And year 5 2,12,444. ரைட்டா குமுலேட்டிவ் ஜோதிகா செக் பண்ணுமா. Harish Lenin correct check பண்ணு. Total 2,12,444. Is it right? Reddy Garu. Guru. Nice response. Am I audible?
Yes, sir.
Answer right edakana. Are doing or not?
Sir, last total what's the?
2,12,444. Right?
It's coming 2,18,652, sir.
18,000 வருதா?
எனக்கும் அதான் சார் வருது.
Year 2 க்கு என்ன வந்திருக்குன்னா cumulative
38,677, sir.
Okay. Year 3 க்கு
1,03,288.
Year 4
170,224.
1,70,222. Okay. Last yearல discounted CFT எவ்வளவு வருது பாரு? 78,000 last year இல்லையா? 2,18,652 அடக்கண்ணா.
Yes, sir.
Right. Yes. Discounted CFT 48,430. Cumulative discounted CFT 2,18,652 or 653. Right. Good.
Yes.
So
Yes, sir.
initial investment is how much? Initial investment is equal to 2,10,000. When we are getting 2,10,000 in between 4th and 5th year, am I right or not? After 4th year,
Yes.
discounted payback is equal to 4 years plus number of months. So up to 4 years, how much we got it? 1,70,222 akana. So balance to be recovered comes to how
Yes,
much?
sir.
Balance to be recovered 2,10,000 minus 1,70,222 is equal to
39,778.
39,778 we have to recover. Am I right? Yes. 39,778 you have to recover. That we can recover only in 5th year. In 5th year, for 12 months period, we got 48,000. Yes, Harish, 48,430. Am I right? But I need only
Yes.
39,778. Father, how many months I have to work? 12 மாசத்துக்கு 48,430 I'm earning. But I need only 39,778. Therefore, how long you have to work? How long you have to work?
9 points.
9 point. So, discounted payback is equal to 4 years plus 9.8 months. Right? Check பண்ணிக்கோ. Discounted payback is equal to 4 years plus 9.8 months. Is it right, my dears?
Yes, sir.
Good. All of you got it? Any doubt, Kanam? All of you comfortable or not? Good. Shall we go to the next problem?
Yes, sir.
Good. Shall we read the question, Kanna? Ready, Garu? Chadavandi.
An investment of rupees 1,36,000 yields the following cash flows. Profit before depreciation but after tax. Determine internal rate of return. Year 1, rupees 30,000. Year 2, rupees 40,000. Year 3, rupees 60,000. Year 4, rupees 30,000. Year 5, rupees 20,000. Total 1,80,000. Find NPV and PI.
So we have to compute net present value and profitability index. Okay, good. Go through the question quickly. First, note it down. Net present value. Net present value. It represents excess of total discounted CFAT over initial investment. Excess of discounted CFAT, total discounted CFAT over initial investment. Next. Formula for net present value. Formula for net present value. Total discounted CFAT. Net present value is equal to total discounted CFAT minus initial investment. Total discounted CFAT minus initial investment. Acceptance rule. Acceptance rule. If net present value greater than or equal to 1, net present value greater than or equal to 1, accept. Net present value, next.
Sir?
Yes.
Sir, can you please repeat, sir?
Acceptance rule. Okay. If net present value greater than or equal to 1, sorry, greater than or equal to 0, not 1, greater than or equal to 0, accept the project. Greater than or equal to 0, accept the project. If net present value less than 0, reject the project. Net present value less than 0, reject the project. Next, profitability index. Profitability index. Formula: total discounted CFAT minus divided by initial investment. Acceptance rule. Profitability index greater than or equal to 1, accept. Profitability index less than 1, reject. Note பண்ணியாச்சா?
Yes, sir.
Now, we'll go through the question now. Year 1, how much CFAT? Year 1,
30,000.
30. Year 2, 40,000. Am I right? Year 3, 60,000. Year 4, 30,000. Right? Check பண்ணிக்கோ. Year 5, 20,000 அப்பா. Is it right? 30, 40, 60, 30, 20. Am I right? Very good response.
Yes, sir.
Then,
Yes, sir.
the question you can note PV factor 10%. Apply PV factor 10%. Then, PV factor 10%. You can note it down the question itself. Okay. So, year 1, 0.9091. Year 2 PV factor 10%, 0.8264. Year 3, 0.7513. Year 4, 0.6830. Year 5, 0.6209. So discounted CFAT into PV factor is equal to discounted CFAT. 30,000 into 0.9091 is equal to 27,273. Year 2, 40,000 into 0.8264 is equal to 33,056,056. Year 3, 60,000 into 0.7513 is equal to 75,073. Year 4, 30,000 into 0.6830 is equal to 20,490. Year 5, 20,000 into 0.6209 is equal to 12,418. Right? So total discounted CFAT comes to how much, Anna? Total discounted CFAT comes to. Good response.
138,315.
1,38,315. Less initial investment. How much initial investment? How much initial investment, my dears?
1,36,000.
Therefore, net present value is equal to 1,38,315 minus 1,36,000 is equal to 2,315. Right? Huh? Is it right?
Sir.
Profitability index is equal to total discounted CFAT divided by initial investment. Comes to how much?
1.017.
1.02. Profitable index not expressed in terms of times. 1.02 times. Got it? So conclusion. Since profitability index greater than 1, since profitability index greater than 1 and net present value greater than 0, profitability index greater than 1, net present value, wait. So we can accept or not. Whether you can accept the project or not. We can accept the project. So understood profitability index as well as net present value.
Yes, sir.
Yes, sir.
Good. Post exam theory playlist பாத்தீங்களாப்பா? No YouTube channel. All post exam theory chapter wise given. Have you watched? Started watching?
Yes, sir.
Useful இருக்கா?
Yes, sir.
What about others? இன்னும் பார்க்கலையா? டைம் இல்லையா? எக்ஸாம் முடிஞ்சு பார்க்கணும்னு இருக்கீங்களா?
இல்ல சார், இன்னைக்கு பார்ப்பேன் சார்.
அட்லீஸ்ட் பாஸ்ட் எக்ஸாம் கொஸ்டினாவது படிச்சிருங்க. எல்லாம் ஃபுல்லா படிக்க முடியலன்னா புரியுதா? ஒரு சிலபஸ் இட்ஸெல் வெர்ஷன், ஐ கேன் அண்டர்ஸ்டாண்ட் தி சிலபஸ் இட்ஸெல் வெர்ஷன். அதில் ஃபில்டர் பண்ணதான் பாஸ்ட் எக்ஸாம் கொஸ்டின்ங்கிறது இல்லையா? அட்லீஸ்ட் பாஸ்ட் எக்ஸாம் முடிச்சுட்டு தான் போய் ஆகணும், வேற வழி கிடையாது. ஓகே, லீடும்.
Yes, sir.
ஓகே, குட் 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 குட். சாப்டர் வைஸ் எழுதி பார்த்துரு. மியர் லிசனிங் அலோன் எவாப்ரேட்டட் மறந்துடுவேன். பாயிண்ட்ஸ்லாம் நோட் பண்ணி வச்சுக்கூடாது. நெக்ஸ்ட் IRR. Next concept, IRR. Internal rate of return. IRR, internal rate of return. It represents the rate which leads to the rate within bracket discount factor. Rate represents discount factor. The rate which leads to total discounted CFAT is equal to initial investment. The rate which leads to total discounted CFAT is equal to initial investment. Okay. This is similar to the concept of BEP. Similar to the concept BEP, break-even point. Similar to the concept of break-even point. Next, in IRR, point number 1, total discounted CFAT is equal to initial investment. In IRR, total discounted CFAT is equal to initial investment. Point number 2, net present value is equal to 0. Point number 3, profitability index is equal to 1. Profitability index is equal to 1. Understood? If IRR greater than KO, what is KO, my dears?
Cost of overall capital.
Cost. Yes. If IRR greater than KO, you can accept the project. Higher the IRR is preferable. Higher the IRR is preferable. Over. Understood, my dears?
Yes, sir.
So IRR represent what? The rate which leads to inflow is equal to outflow. Total discounted CFAT is equal to initial investment. எந்த ரேட்ல எந்த பர்சன்டேஜ்ல நெட் பர்சன்ட் வேல்யூ ஜீரோ வருதோ, in which percentage, which PV factor, which discount factor, we are getting zero net present value. That factor is called one IRR. Understood? Now, take the above problem. போன ப்ராப்ளம் போட்டோம் இல்லையா? Year 1 30,000, year 2 40,000, year 3 60,000, year 4 30,000, year 5 20,000 போட்டோமா? Take the same problem. Apply 15% PV factor. Kindly apply 15% PV factor. Find net present value. Find net present value first. என்ன சொல்றேன் புரியுதா எல்லாருக்கும்? Nice response. Apply 15% discount factor. Find net present value first. So first column year 1 to 5. Second column CFAT, copy paste. $30, $40, $60, $30 and $20,000. Yes. Then PV factor at the rate of 15%. .8696. Year 1, year 2 0.7561. Then year 3 0.6575. Year 4 0.5718. And year 5 0.4972. Right, Danagana?
Yes, sir.
Discounted CFAT represents CFAT into PV factor. Manage பண்ண முடியுதா எல்லாரையும்? Hope you can manage. Marriage? Comfortable இருக்கா? Reddy garu? Maniganda? Khan Abdul Kabar Khan? Guru?
1,22,920, sir.
Okay, good. Total, yeah. So year 1 26,088. Year 2 discounted CFAT 30,244. Year 3 39,450. Year 4 17,154. Year 5 9,944. Total discounted CFAT comes to 1,22,880.
One lakh 36,000, sir.
Lakh and 36,000. So now you got negative. How much negative you got it?
13,120.
13,120. Good. So now we are going to compute IRR for the same problem. All of you got 13,000 something negative. எல்லாருக்கும் வந்துதான் மோகன்ராஜ் புரியுதா? ரித்திகா புரியுதாமா?
Yes, sir.
Good. What Ritu? Unmute பண்ணிட்டு பதில் சொல்ல வச்சிட்டேன். We have taken two trials. For 10% PV factor, we got positive to the extent of how much? Positive net present value how much?
2315.
2315. 15% PV factor, we got negative net present value of 13,000.
13,120.
120. Now, what is the distance between first PV factor to second PV factor? 5%. 10 and 15 difference solar 5%. What is the distance between first PV factor to first net present value to second net present value? First one 2315, second one 13120. Difference solar what difference?
15,435.
15,435. Good. So, for 5% distance in PV factor, distance in net present value comes to 15,435. Am I right? I need the IRR percentage. So, I am going to travel from 2315, the first net present value, positive net present value. So, cross multiplication. If I am going to travel from 2315, what could be the distance? 2315 into 5 divided by 15,435. Cross multiplication. Good, Ashwin. 2315 into 5 divided by 15,000. The simplest way to compute IRR. எவ்வளோ வருது? 0.75 வருதா? ரைட் அடக்கண்ணா? Is it or not? 2315 into 5 divided by 15,435. சொல்ல மாட்டியா?
Point 8018 வருது சார்.
அப்படியா? 2315 தானே ஃபர்ஸ்ட் ஒன்னுக்கு into 5 divided by 15,435. மணிகண்டா செக் பண்ணுப்பா. கிருத்திகா ரஹ்மான் கான் யாரும் சொல்ல மாட்டேங்கிறீங்க.
Yes, sir. 0.75.
0.7499 வரும். So for 0.75. Therefore, IRR is equal to இதுக்கு வந்துட்டாங்கன்னா 10 plus 0.75. Therefore, IRR is equal to 10.75%. புரிஞ்சுதா? Any doubt in IRR computation? All of you got the answer IRR? புரியுதா? 10.75.
Yes, sir.
Shall we do one more problem based on IRR? Try பண்ணலாமா?
Yes, sir.
Yes, sir.
ஜோதிகாக்கு புரிஞ்சுதா?
Yes, sir.
ஜோதிகா. Year 1 to year 5 CFAT 40,000, 50,000, 65,000, 45,000 and 25,000. Initial investment 1,60,000. Can you explain the last step again? Yeah, I'll explain the last step for the previous IRR problem. For 5%, sorry, 10, we have taken trial for 10% and 15% with respect to PV factor. Am I right? A resultant net present value for 10%, you got 2,000 positive
2315, sir.
2315 positive. Similarly, net present value in case of 15%, you got the loss of 13,000
120, sir.
13,120 loss. So, what about the distance in PV factor? First trial ku train trial irukum 10% to 15%. Therefore, 5% is a distance. Am I right? 5% is a difference. Similarly, net present value என்ன difference வந்திருக்கு? 2315 positive, another one 13,120 negative. So, difference எவ்வளவு? Negative or negative, total positive ல போகும். எவ்வளவுப்பா? 2315 plus 13,120 is equal to 15 எவ்வளவுப்பா? 15,000?
15,435, sir.
435. 15,435. Understood? 15,435. Got it? Therefore, for 5% distance in PV factor, we got distance in net present value of 15,435. If I start from 2315 லேந்து போறேன், in which percentage I will land up with 0 profit. So cross multiplication 2315 into 5 divided by 15,535. 15,535 is equal to how much? 0.75 வரும் நினைக்கிறேன். 0.75. Therefore, IRR is equal to 10 லேந்து ஆரம்பிச்சோம் 10% தான் starting point plus 0.75 is equal to 10.75%. Ashwath Raghu. புரிஞ்சுதா? Good. It's the easiest way to compute IRR. Now, shall we do one more problem based on IRR so that you have the grip over IRR? Okay. We'll do one more problem. Year 1 to year 5, CFAT 40,000, 50,000, 65,000, 45,000, 25,000. Initial investment 1,60,000. Initial investment 1,60,000. Find IRR. Listen here, my dears. For the purpose of computation of IRR, they won't give any percentage because IRR itself percentage, that is what you are going to compute. Okay, Ashwath, IRR percentage தான் அதான் கண்டுபிடிக்கணும். Therefore, for the computation of IRR, they won't give any percentage. We have to identify, we have to find. Clear? Therefore, to compute IRR, the rule is we need one positive net present value, you need one negative net present value. That is possible or not possible? Arbitrarily take some percentage, any percentage you can take. So you have taken 10 and 15. Ultimately 10, 15 ஆனா 12, 13 இருக்கலாம். Okay, 12, 15 எது வேணா இருக்கலாம். Ultimately we need what? One positive net present value, one negative net present value. Why you need a positive and negative net present value? In between positive and negative only, somewhere zero is there. That percentage is called IRR. Because in IRR, net present value is equal to 0. Mohan Raj, now got the clarity? எதுக்கு அப்படி போடுறோம்ட்டு? ஜோதிகா புரியுதா? So
Yes, sir.
to compute IRR, we have to identify one positive net present value, one negative net present value. PV factor கொடுக்க மாட்டோம் because that is what we are going to, IRR itself the PV factor, that is what we are going to compute. Arbitrarily you can take some percentage and we need positive and negative கொண்டு வர வரைக்கும். Shall we try? Now, for uniformity purpose, first column year 1, 2, 3, 4, 5. Second column CF80. Ashwath போடுறீங்களா? ஹரி போடுறீங்களா? 40,000, 50,000, 65,000, 45,000, 25,000. Good. PV factor at the rate of numbers to எது வேணா வச்சுக்கலாம். Which factor you want? 10% you can apply. PV factor at the rate of 10%. Find net present value. என்ன வருதுன்னு for positive negative வரணும். So you got positive net present value, my dears. Check பண்ணி என்ன வருது பாரு. You may get positive net present value, I hope.
12,777, sir.
12,777 positive அடக்கண்ணா.
Positive, sir.
Very good. Very good. East or west? Jyotika is best. அஸ்வத் வந்துதா? ஹரிணி வந்துதா? ஹரீஷ் வந்துதாப்பா? குரு என்னாச்சு? மணிகண்டா, ரித்து முடிச்சிங்களா? ரித்திகா எந்த காலேஜ் மணி?
MOP Vaishnav.
MOP? Vaishnav.
MOP Vaishnav.
Vaishnav. இந்த டிபார்ட்மெண்ட்
BCom Honors.
லாஸ்ட் மந்த் உங்க காலேஜ் தான் வந்தேன், உங்க கிளாஸ் தான் வந்தேன் நான்.
Okay.
For giving lecture I came to your college. ஒரு மார்னிங் பேட்ச் வந்தேன், ஒரு ஈவினிங் பேட்ச் வந்தேன். கொஞ்சம் தெரியல பிரிச்சு பி காமன் got positive all of you. Now you need a negative. Apply 15% for uniformity purpose. Apply 15%. Check it up negative or than parvo. Ashwathama hadaha. How much negative? 15% potacham. For 15%, what are the answer? Kanarthigam. Reddigarum. Ashwath. In case of PV factor 15%.
6,512, sir.
Minimum?
Minus 6,512.
Very good. Now check paniko. 6,512. Right. Right. Okay.
Sir, can you repeat the initial investment?
1,60,000. 160.
So 6,512, sir.
Enakana?
Negative on the 6,512, sir.
6,512. Yeah, 12 or 13. Yes. Positive 12,777. மோகன் ராஜ்போட்டிங்களா வருதா பாருங்க.
Yes, sir. One sir.
மணிகண்டா ಶಶಾಂಕ್ என்னாச்சு ரக்கண்ணா கேம பிந்து இருக்கியா த்ரோட்லாம் பரவாயில்லையா உனக்கு ராமப்பிரியா என்னாச்சு ரமாப்பிரியா now find IRR. We got one positive and we got one negative. Difference between first PV factor to second PV factor 5%, 10 and 15 5%. Difference between first net present value to second net present value 12,777 plus 6,512 is equal to what? 12,777
13.316, sir.
19,289.
Yes, sir.
Okay. So for 5% distance IRR for 5% distance in net present value, 5% distance in PV factor, distance in net present value comes to 19,289. Okay. If I am going to travel from 12,777 PV factor level PV, how much distance I have to travel? Cross multiplication 12,777 into 5 divided by 19,283. 3 point something or the
3.31, sir.
very good. 3.31. Therefore, IRR is equal to 10 plus 3.31 is equal to 13.31%. Very good, Ashwath. Ashwath, you are from which place, Ashwath? Chennai or what? Good. All of you got 13.31. சின்ன பசங்களா முடிச்சிங்களா?
Yes, sir. Yes, sir.
Good, sir. Good, sir. எல்லாருக்கும் புரிஞ்சதா ஐயாரா?
Yes, sir.
IRR formula input material பார்த்தனா தலை சுத்தும் உனக்கு. The easiest method, simplest way to compute. Easier இருக்காது? The rule
Yes,
is to compute IRR, you need one positive net present value, one negative net present value. That's all. In between positive and negative net present value, by way of reverse working, you can compute IRR. All are happy?
Yes, sir.
Yes, sir.
Yes, sir.
Good, 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 good. Next, shall we go to the next one? Very good, Harish. Harish from which place? Lenin. Shall I go for modified MIRR polama? Benandria, Banandria. Nahapattinam. Good. உங்க ஊர்ல மட்டும் என்ற கோயில் அப்படியே தங்கியிருந்தா ஏண்டா நீங்க மட்டும் சாப்பாடு வெளில அனுப்பாம பத்திரமா பாத்துக்கிறீங்களா? அப்படிதானே ஹரிஷ்? Shall we go for MIRR? I am ready. Are you ready?
Yes, sir.
Good. Write it down. MIRR stands for modified internal rate of return. Modified internal rate of return. MIRR is for the purpose of to overcome the limitations of IRR. To overcome the limitations of IRR. Next, limitations of IRR. Point number 1. IRR does not give
IRR?
no,
So, IRR, sir.
Internal rate of return. IRR.
Limitation.
To overcome the limitations of IRR, thereafter limitations of internal rate of return. Point number 1. IRR does not give. IRR does not give return on investment in value. IRR does not give return on investment in value, that is rupees. Second point, IRR does not consider difference in the duration of the project. That is, if 2 years project gives 10% IRR, if 2 years project gives 10% IRR, and 10 years project gives 8% IRR, then based on IRR rule, dash project is preferable. எது preferable கண்ணா? 2 years project or 10 years project based on IRR rule?
2 years project.
2 years project. 2 years project is preferable because higher the IRR is advisable. But actually speaking, 10 years project is viable for the company. 10 years project is viable for the company. Third one, IRR calculations also assume all cash flows will be reinvested at IRR calculations also assume all cash flows will be reinvested at same rate over the terms of the entire project. Same rate over the terms of the entire project. This means cash outlay, nothing but cash outflow, cash outlay, and the subsequent cash inflows, cash outflows and subsequent cash inflows will have the same earning potential, will have the same earning potential, even if these cash flows span years.
Sir, last number திரும்பி repeat பண்றீங்களா?
This means the initial cash outflow, nothing but initial investment, initial cash outflow, and subsequent cash inflows, that is called CFAT. Initial cash outflows and the subsequent cash inflows, that is CFAT. will have the same earning potential. Will have the same earnings potential. Even if these cash flows, even if these cash flows span years.
Sir, what's up? Even if these cash flows?
SPAN span years. Last point. A series of cash inflows. Yeah, SERIES. Series of cash inflows may end up having two valid IRR calculation. May end up valid two IRR calculation.
So two or true?
Two TWO two. Valid IRR calculation. This problem arises. This problem arises when a project has uneven cash flow over its life. Uneven cash flow over its life. And generally occur when the direction of the cash flows changes. Direction of the cash flows changes. What is direction of the cash flow changes? In general, CFAT positive இருக்கும். Sometimes negative வர chance, loss வர chance இருக்கு இல்லையா? That's why direction of the cash flow changes. That is negative cash flow. That is negative cash flow. When this occur, a project has more than one internal rate of return. And maybe
Sir, more than one?
Internal rate of return, IRR. And maybe more difficult to analyze. Understood, my dears? Next paragraph you can note it down. To fix the last two issues, A different calculation was created. Different calculation was created. அஸ்வத் ஹரிஷ் குருலாம் எழுதுறீங்களா? அஸ்வின் எழுதிட்டு இருக்கியா? மணிகண்டா இருக்கியா? To fix the last two issues above related to IRR, a different calculation was created. Good. The MIRR uses a MIRR uses a lot of similar concept as IRR. Lot of similar concept as IRR. But these are slightly different to help improve the original formula.
But these are
slight difference to help improve the original formula. Difference to help improve the original formula. MIRR is calculated by incorporating the future value of positive cash flows. Incorporating future value of positive cash flows and the present value of cash flow taken at different discount rate. Different discount rate. ஜோதிகா நோட் பண்ணிட்டீங்களா?
Yes, sir.
Kindly read one more time. All of you check it up. சரியா இருக்கானு பார்த்துக்கோ.
MIRR is for the purpose of to overcome the limitations of IRR. Limitations of IRR. First point, IRR does not give return on investment in value in rupees. Second point, IRR does not consider difference in the duration of the project. That is, if 2 years project gives 10% IRR and 10 years project give 8% IRR, based on the IRR, 2 years is preferable because higher the IRR is advisable. But actually speaking, 10 years project is viable for the company. Third point, IRR calculations also assume all cash flows will be reimbursed at the same rate over the terms of entire project. This means cash outlay and subsequent cash inflows will have the same earning potential even if these cash flows span years. Fourth point, a series of cash inflows may end up having two IRR calculations. This problem arises when a project has uneven cash flows over its life and generally occur when the direction of the cash flows changes, that is, negative cash flows. When this occurs, a project has more than one IRR and may be more difficult to analyze. To fix the last two issues, a different calculation was created. MIRR uses a lot of similar concepts as IRR, but these are slightly different to help improve the original formula. MIRR is calculated by incorporating the future value of positive cash flows and the present value of cash flow taken at different discount rate. That's all.
Good, Kanna. Got it, all of you? There's a concept behind MIRR. Check பண்ணியாச்சா? Good. Now, shall we go for computation part? போலாமா? How to compute MIRR? Good response.
Yes, sir.
Good. So we have a small break. Thereafter, we can start computation of MIRR, cost exam question. Okay? Tea break for you. Coffee break for you. Relax and come.
Okay, sir.
Shall I start, my dears? ஆரம்பிக்கலாமா? I am ready. Are you ready? Nakshvat calls out Acha. Harish. குருலாம் இருக்காரா இல்லையா? கிளம்பிட்டாரா? ரஹ்மான் கான் வந்தாச்சா? மோகன்ராஜ் இருக்கியாப்பா? ஜோதிகா அக்கா இருக்கியா?
Yes, sir.
Good. ஹேமா வந்தாச்சா? ரெட்டி காரு?
Yes, sir.
Good. Now we have to start MIRR. Am I right? Shall we start with the MIRR? Good.
Yes, sir.
Initial investment 1,36,000. Note பண்ணிக்கோ. Initial investment 1,36,000. Cost of capital 8%. Cost of capital 8%. CFAT per annum year 1 30,000. Year 2 40,000. Year 3 60,000. Year 4 30,000. Year 5 20,000. 30, 40, 60, 30 and 20. Right? Huh? Find MIRR. Find MIRR. Start பண்ணலாமா?
Yes, sir.
First column here, heading statement of computation of MIRR. Statement of computation of MIRR. First column year, and year 1, 2, 3, 4, 5.
Sir, what is the 5th year cash flow, sir?
Second column CF80 அப்படியே நோட் பண்ணிக்கலாம். 30,000, 40,000 year 2 40,000, 60,000, 30,000 and 20,000. நோட் பண்ணிட்டாங்கன்னா 20,000 தரணும். 30, 40, 60, 30, 20. Okay, Ashwin.
Okay, sir.
Next. Reinvestment factor at the rate, reinvestment rate factor at 8%. Reinvestment rate factor at 8%. Reinvestment rate factor la we are coming from the reverse side kanna. 5th year க்கு thereafter invest பண்ண முடியாது. Am I right? Because end of the 5th year over. Am I right? Project over ஆயிடுது. 4th year க்கு till 5th year வரைக்கும் reinvest பண்ண முடியும். In 3rd year we can be invest for another 2 more years. Are able to follow? என்ன சொல்றேன்னு புரியுதா? Shall I repeat once again?
Repeat, sir.
Yes, sir.
If we are having cash flows, kanna, assume you have invested, okay, 1,36,000 FD la potirukka. Okay, you have invested 1,36,000. For that year 1 you are getting interest of 30,000. That is the inflow, cash inflow. Year 2 you got the interest of 40,000. Year 3 60,000. Year 4 30,000. Year 5 20,000 interest. Now got the logic புரியுதா என்ன சொல்றேன்ட்டு? FD pot amount 1,36,000. Further you are getting interest of 30, 40, 60, 30, 20. In the logic புரியுதா?
Yes, sir.
Now
Sir.
year 1 30,000 வருது இல்லையா interest. That interest will be there in the bank. We are not going to withdraw the investment. Am I right? 5 year deposit போட்டா accumulated interest வரும். Are you able to follow or not? அந்த 30,000 பேங்க்லயே தான் இருக்கும். That 30,000 also will be there in the bank. That will be there for another 4 more years. Am I right? Logic புரியுதா? 5 years period.
Yes, sir.
5 years period.
Yes, sir.
Yeah, 5 years period. இந்த 5 years periodல தெரியுதா உங்களுக்கு புரியுதா? 5 years periodல year 1 உடைய interest will be there in the bank itself. That will be there for another 4 more years. Am I right? Year 2 if I am going to get 40,000 interest, that will be there for the another 2 more years or 3 more years. Am I right or not? So that we can get accumulated interest on the interest. Logic புரியுதா? Nothing but 1 லட்சம் இன்வெஸ்ட் பண்றோம். First year 20,000 interest வந்ததுனாக்க that interest also will be there in the bank. Therefore second year you will get the return out of 1,20,000. 1 lakh principal plus interest 20,000. 1,20,000 க்கு interest கிடைக்கும். Got it or not?
Yes, sir.
இந்த லாஜிக்ல
Bonding effect.
compounding effect. Yes, Kanna. So year 1 first column year போட்டு second column CF80, third column 8% factor போட்டுக்க. In that 8% factor 5th yearல 1 போட்டுக்கோ. 5th year factor 1. 4th year 1 plus 8% is equal to 1.08. Third year again 8% add பண்ணிக்கோ. 1.08 plus 8% is equal to what ஆகணும்? 1.08 plus 8%. சொல்ல மாட்டீங்களா?
1.1664.
1.1664. Second year 1.1664 plus 8% add பண்ணி போடு. ரிவர்ஸ்ல போறோம் நம்ம.
1.2597.
1.2597. 1.2597 plus 8% for the first year.
1.3604.
1.3604. Got it or not? இது லாஜிக் புரியுதா மோகன்ராஜ்? எல்லாருக்கும் புரியுதுங்களா? So 8% reinvestment rate factor. Year 1 1.3604, year 2 1.2597, year 3 1.1664, year 4 1.08, year 5 க்கு 1 தான், because there is no further reinvestment. Got it? Ashwath புரியுதா? ஹரிஷ் புரியுதா? Now apply discounted, apply the what? Cash flows. 30,000 into 1.3604 is equal to எவ்வளோப்பா?
40812.
812.
Yeah, 40,812. Year 1 க்கு 40,812. Similarly, year 2 40,000 into 1.2597 is equal to
50,388.
50,388. Check பண்ணிக்கொள்ளாரும். Year 2 க்கு 50,388. Year 3 60,000 into 1.1664 is equal to
69,984.
69,984. Year 5 30,000 into 1.08 is equal to
32,400.
32,400. Year 5 20,000 into 1 20,000. You got the logic? Total is equal to how much?
2,13,584.
2,13,580 something. 584 அப்பா.
Sir.
Total is equal to 2,13,584. All of you got it? Therefore, MIRR is equal to initial investment divided by future value of CFAT. Now we did the future value, right? Future value of CFAT. That is MIRR is equal to 136,000 initial investment divided by future value of cash flow 2,13,584 is equal to எவ்வளவு வருதுப்பா? 1,36,000.
6367.
6367 அப்பா. Okay, good.
Yes, sir.
6367, correct. 6367. Now refer present value factor PV table. Table கையில இருக்கா இல்ல bookல last pageல இருக்கும் பாருங்க. Present value table தெரியும் இல்லையா டேபிள்ல?
Yes, sir.
This is for the 5 year. In 5th year, where we are getting, in which percentage are getting 0.6367 பாருங்க.
Between 5 and 6.
5 yearsல in which percentage you are getting, I'm talking. 5th year காலத்துல பார்த்துட்டே வா, whether 6% or 7% or 8% or 9%, where we are getting 0.6367 இங்க வருது பாரு.
9%.
9% tally ஆகுதா? Okay. So MIRR is equal to then 9%. 9% வருதா பாரு. So in 9% column for the 5th year, you are going to get 0.6367 or approximately nearest to the 0.6367. Got it? 9% வந்ததா கண்ணா?
Sir, accurately 9.45%.
பரவாயில்ல. When you can compute IRR மாதிரி கண்டுபிடிக்கலாம், or approximately 9% also correct. Nearest answer எங்கிட்ட அது போதும். or 9 and 10 வருதுன்னாக்க you can compute like IRR computation, you can compute 9 point something also you can. Ashwath புரிஞ்சுதா? ஹரிஷ் புரிஞ்சுதா கண்ணா? Got it? 9 point something. பை சொல்லிட்டு இங்க வந்து சொல்லு எல்லாரும். நீ பிரைஸ்லாம் வாங்கி சொன்னீங்க எல்லாருனாக்கு. ஜோதிகா அக்கா இருக்காங்க, ரெட்டி கார் இருக்க, ரித்திகா
ஹலோ,
எல்லாருக்கும் பை சொல்லு. நீ என்ன பிரைஸ் வாங்கினு சொல்லு இன்னைக்கு? எதுக்கு பிரைஸ் வாங்கின?
Hi.
ஹாய் சொல்றேன், சொல்லணும். பை சொல்லு, பை சொல்லிட்டு போ. எதுக்கு பிரைஸ் வாங்கினு சொல்லு. மேடம்க்கு இன்னைக்கு ஃபேன்சி ட்ரெஸ் காம்படிஷன். ஸ்கூல்ஸ்லாம் ஜாலி இல்லை?
எஸ் சார்.
Yes, sir.
திரும்ப அங்கே போகணும் போல. அங்கே இருக்கும்போது பயமா இருக்கும், ஹோம்ஒர்க்லாம் பண்ணுமே, டீச்சரை பார்க்கணும். இங்கே வந்தப்பறம் அங்கேயே இருந்துக்கலாம். இங்கே வரும்போது அங்கேயே இருந்துருக்கலாம் போல இருக்கு. அங்கேயாவது சிலபஸ்ன்னு ஒன்று இருந்தது, இது எதை படிக்கணும்னே தெரியல, எல்லாத்தையும் படிக்க வேண்டியிருக்கு. பெரிய கோர்ஸ் எடுத்தா எப்போ முடிப்போன்னு தெரியாது, என்னைக்கு சண்டே என்னைக்கு மண்டேன்னு தெரியாது. புழலா மழையா இந்த பாட்டுல மாதிரி என்னைக்கு இருந்தாலும் படிச்சுன்னு தான் இருக்கணும். நீ இல்லை எப்படி இருந்த பசங்க இப்படி ஆயிட்டீங்களடா. ஒரு மழை வந்தா டிவியை பார்த்து லீவ் இருக்கான்னு பார்த்துட்டு இருக்கா காலம் போய். வாட் ஜோதிகா, ரைட் பண்ணணும். காட் எம்ஐஆர்ஆர் புரிஞ்சுதா? பல பேர் எம்ஐஆர்ஆர் படிச்சிருக்க மாட்டேன், இந்த எக்ஸாம் படிச்சுட்டு போ. ஓகே, ஏன்னு கேட்காம படிச்சுட்டு போ, சரியா? கம்படிஷன் ஈஸியா இருக்கா? புரியுதா? சிம்பிளா இருக்கா? ஏன்னா பல சமயம் இன்ஸ்ட்ருமெண்டல் பயங்கர காம்ப்ளிகேஷன் நிறைய இருக்கு, தட் இஸ் போடுறத ஒர்க் அவுட் பண்றது. ஐ சிம்பிளிஃபைட் த ஆன்சர் ஸோ தட் இதே ஆங்கிள் போ, வித்தின் லெஸ் டைம் யூ கேன் கம்ப்யூட். லாஜிக் புரியுதா? என்ன பண்ணிருக்கோம் திரும்ப?
புரியுது சார்.
வெரி குட். Shall we do one more based on MIRR?
Yes, sir. Yes, sir.
Another question, past exam question based on MIRR. A PV table will be given in this question itself. Table கொடுத்துருவாங்க. Even otherwise, shall I teach you how to compute PV table? How to create PV table சொல்லி தட்டுமா?
Yes, sir.
வேணுன்றியா வேணான்றியா? இல்ல கொடுத்தா போன்றியா?
வேணும் சார்.
ஓகே. ஸோ டேக் யுவர் கேல்குலேட்டர். மொபைலில் இல்லை, ஒர்க் ஆகாது. சயின்டிஃபிக் கேல்குலேட்டர் ஒன் ஒர்க், மொபைல் கேல்குலேட்டர் ஒன் ஒர்க், நார்மல் கேல்குலேட்டர் வச்சுக்கோ. நார்மல் கேல்குலேட்டர் வச்சிருக்கேன் எல்லாரும்? ஸ்டூடெண்ட் நல்லா வச்சிருப்பேன்.
Yes, sir.
Now இதே ஸ்டெப்ஸ் நோட் பண்ணிட்டு நீ கால்குலேட் பண்ணு so that you can get the answer. Okay, PV factor for 10%. நோட் பண்ணிக்கோ, பேரலா நோட் பண்ணி வச்சுக்கோ. PV factor for 10%. $100 first step, 100 next divided by 110 is equal to, you got 0.9091. am I right? வந்திருக்கும் நினைக்கிறேன்.
Yes, sir.
அது year 1 ஓட PV factor. 10% குள்ள year 1 ஓட PV factor. Up to this stage are you comfortable? 100 divided by 110 because 10% நால 110 போட்டுருக்கும். 100 plus 10 போட்டுருக்கும். is equal to போட்டா you will get year 1 உடைய PV factor. All of you got it or not? ஒரு thumbs up போடலாம், yes ன்னு சொல்லலாம், yes ன்னு டெக்ஸ்ட் பண்ணலாம்.
Yes, sir.
ஏன் ரித்திகா மாதிரி எல்லாம் சைலண்டா இருக்கீங்க?
Yes, sir.
நெக்ஸ்ட் into ரெண்டு டைம் into பிரஸ் பண்ணு. into multiplication 2 times equal to, thereafter equal to போட்டோம்னா you'll get 0. என்ன வந்திருக்கு?
Year 26.
That's the year 2 உடைய PV factor. am I right? You got the answer for the year 2
Sir,
PV.
0.0082.
No, நான் சொன்னது கரெக்டா போட்டா வரும். 100 divided by 110 equal to போட்டதுக்கு அப்புறம் into ரெண்டு டைம் into equal to போட்டா first one 0.9091, second one 0.8264 வந்திருக்கும். வந்துதான் எல்லாருக்கும்?
எனக்கு திரும்பியும் அதே மாதிரி தான் சார். டபுள் 0.00826.
நீ ஒரு டைம் பிரஸ் பண்ணு, ரெண்டு டைம் இன்டூ படம் போட்டு பாரு உன் கால்குலேட்டர் மட்டும். நீ கேஷ் வச்சிருக்க என்ன வச்சிருக்க?
கேஷியர் தான் சார்.
சரி, நீ மட்டும் 100 by 110 by 100 by 110 equal to into equal to போடு. ஒரு டைம் இன்டூ போட்டு பாரு.
வந்துச்சு.
ஓகேவா? ஓகே. சில கால்குலேட்டர் இந்த ஃபங்க்ஷன் ஒர்க் ஆகாது, அதுக்காக. All of you got it? year 2 PV factor வந்து எல்லாம் இருக்கும்.
Yes, sir.
What is the year 2 PV factor?
0.8264.
Again equal to மட்டும் பிரஸ் பண்ணு. என்ன வந்திருக்கு?
7513.
It's a year 3 ஓட PV factor. Again equal to போடு, year 4. Again இதுக்கு அப்புறம் equal to போட எவ்வளவு வருஷம் போயிட்டே இருக்கும். So I will repeat, 100 divided by 110 is equal to into thereafter equal to respect year வந்து 15% செக் பண்ணி பாக்குறியா? நம்ம ஆல்ரெடி டேபிள் போட்டுருக்கோம் இல்லையா? 15% செக் பண்றீங்களா கொஞ்சம்? So that you will get the full satisfaction. Shall we?
Yes, sir.
100 divided by 115 equal to year 1 PV factor 0.8696 வந்திருக்கணும். வந்திருக்கா?
Yes, sir.
into equal to ரெண்டு டைம் into thereafter equal to 7561 வந்ததா கண்ணா?
Yes, sir.
Again equal to 6575 வந்ததா? 0.6575.
Yes, sir.
Again equal to
Sir,
again equal to போட்டா 0.5718 வந்திருக்கா?
Yes, sir.
Again equal to 0.4972 வந்ததா?
Yes, sir.
Yes, sir.
Good. So now you know how to create PV factor. Am I right? All are happy?
Yes, sir.
அவ்வளவுதான். எல்லாரும் ஹாப்பியா? புரிஞ்சுதா?
Yes, sir.
மோகன்ராஜ் வந்துட்டு உங்களுக்கு வெரி கம்ஃபர்டபுள்.
செகண்ட் வேல்யூ வந்தது, தேர்ட் வேல்யூ வரல சார். தேர்ட் டைம் இன்டு ஈக்குவல் டு கொடுக்கும்போது வரல சார்.
நீ தப்பா புக் பண்ணிக்க. அதுக்கப்புறம் வந்து ஆகும். ஈக்குவல் டு போட்டு அதுக்கப்புறம் ஈக்குவல் வேற ஒன்றும் பண்ண ஃபங்க்ஷனே கிடையாது. ஈக்குவல் மட்டும் தான் ப்ரெஸ் பண்ண போறோம்.
ஈக்குவல் டு போட்டேன், அந்த டிஜிட் மட்டும் ஏறுது, ஆனா வேல்யூ வரல சார்.
இன்டு ஈக்குவல் டு போட்டு பாருங்க. நீ ஏதோ ஒரு டகடா பகடா கால்குலேட்டர் வாங்கியிருக்க. சரவணா ஸ்டோர்ல வாங்கிட்டியா?
இல்ல சார், கேஷ்
ஏதோ
இல்ல, இல்ல.
பண்ணிருக்கடா. Now, in exam, you should not use scientific calculator. Theriyum ellam சொல்லுவாங்க. No, the classmates ஓடி வந்துருவாங்க. எதை ஆஃப் பண்ணணும்? நான் பார்த்துக்கிறேன் நீ. I will take that. Okay, you carry. Now, note பண்ணிக்கோ. CFAT year 1 90,000, year 2 90,000, year 3 80,000, year 4 also 80,000, year 5 60,000.
Excuse me, sir. Can you please repeat?
No. I'll repeat once again. Check பண்ணிக்கோ. 90, 90, 80, 80, 60,000. Initial investment 1,000. Year 5 60,000. இல்லையாடா? Year 5 60,000. Initial investment 2 lakhs. Reinvestment factor 10%. Reinvestment factor 10%. Find MIRR. $90, 90, 80, 80, 60,000. Reinvestment factor 10%. Initial investment 2 lakhs. Find MIRR. Quick find பண்ணுங்க. First column year 1, 2, 3, 4, 5. Second column CFAT 90,000. Year 2 90,000. Year 3 80,000. Year 4 80,000. Year 5 60,000. Then
20%, sir.
reinvestment factor year 5, year 4 1 plus 10 is equal to 1.10. Year 3 ki 1.10 plus 10%. Similarly, year 2 and year 1. So last column, future value. Future value for the year 1, 1,31,769 agana.
Yes, sir.
Yes, sir.
Year 2 similarly
1,19,790, sir.
1,17,000 19,790 agana. 19,790. Year 3 96,800. Year 4 88,000. In the year 5 as it is 60 agana. Year 5 60 danama.
Yes, sir.
60,000. Total comes to 4,96,000 something. 4,96,000 எவ்வளோப்பா?
359, sir.
359.
359. Got it? So MIRR is equal to initial investment divided by this future value comes to எவ்வளவு கிடைச்சது
20%, sir.
20%. 2 lakhs divided by 4 lakhs something. So 2 lakhs divided by 4,96,359 is equal to 0.40, 0.4029 upon.
Yes, sir.
So rough PV factor in 20%, fifth year column, you'll get 0.4029. So MIRR is equal to 20%. Ashwath, Manihinda, புரிஞ்சுதா MIRR ஈஸியா இருக்கா?
Yes, sir.
Yes, sir. Yes, sir. Good, good. So what and all we have learned? Simple payback, payback reciprocal, ARR, net present value, discounted payback, net present value, profitability index, IRR, MIRR. The first three techniques are without considering time value of money. The last four techniques are 4 or 5. Last 5 techniques with considering time value of money. Simple payback represent time duration required to get back the amount invested is called simple payback. So initial investment by CFAT is equal to simple payback computation. But in case of cash flow, you have to identify cumulative CFAT. Accordingly, you have to identify which year you are going to get invested amount when we are going to get back. Next, payback reciprocal. It's purely based on return on investment concept that we have to express in terms of percentage. Formula for payback reciprocal is CFAT per annum divided by initial investment into 100 is equal to payback reciprocal. Then ARR, accounting or average rate of return. Formula for ARR, average profit after tax per annum divided by net initial investment into 100. Net initial investment represents initial investment minus salvage value, if any, is called net initial investment. Next, discounted payback. It's similar to the computation of simple payback, but after considering time value of money is called discounted payback. After considering PV factor or time value of money, we have to identify when I am going to get back the amount I have invested. Next, net present value. It represents total discounted CFAT minus initial investment is equal to net present value. If net present value greater than or equal to 0, we can accept the project. The net present value less than 0, we have to reject it. Then profitability index formula, total discounted CFAT divided by initial investment is equal to profitability index. If the profitability index greater than or equal to 1, we can accept. If less than 1, we have to reject. IRR, it represents the rate in which total discounted CFAT is equal to initial investment is called IRR. So to compute IRR, you need one positive net present value and you need one negative net present value. In which rate I am going to get 0 net present value, that is called internal rate of return, IRR. So by way of low value and high value, by way of reverse working or what? Comparative working, we have to compute IRR. Then MIRR, modified internal rate of return. இது வரைக்கும் பார்த்த எல்லாமே டிஸ்கவுண்ட் ஃபேக்டர் அப்ளை பண்ணும். இன் கேஸ் ஆஃப் மாடிஃபைடு ஃபியூச்சர் வேல்யூ என்னவா இருக்கும்னு பார்க்கணும். கிளியர்? பை வே ஆஃப் ரீஇன்வெஸ்ட்மெண்ட் கான்செப்ட், தட் இஸ் கால்ட் MIRR. So hope you understood capital budgeting concept, all the concept. எல்லாருக்கும் புரிஞ்சிருக்கும்னு நினைக்கிறேன். All are happy?
Yes, sir.
Yes, sir.
Good.
Yes, sir.
எஸ்பெஷலி ஐஆர்ஆர் அண்ட் எம்ஐஆர்ஆர் ஈஸியாக இருக்கு அவங்களுக்கு. இது வரைக்கும் படிக்காத கான்செப்ட்லாம் படிச்சிருப்பீங்க ஒழுங்கா. போட தெரிஞ்சிருச்சா? கம்ஃபர்ட்னஸ் கிடைச்சிருக்கா?
Yes, sir.
Yes, sir.
Good. Enjoy Sunday. When it's my next session, we'll meet soon. Okay. தியரி நல்லா படிச்சுக்கணும். ஃபர்ஸ்ட் எக்ஸாம்பிள்லாம் கொடுத்துருக்கேன், படிச்சுக்க. All the best.
Okay,
Bye-bye.
Thank you, sir.
Thank you, sir.
Thank you.
Thank you, sir.
Thank you.
Thank you, sir.
Thank you.
Thank you, sir.
Thank you. Bye-bye. Study well. Thank you, Harish. Thank you. Bye-bye. Thank you, Ashok.